touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning. Thanks for tuning in. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets have extended declines after US President Donald Trump said that China broke the deal and they will have to pay for it. China has also threatened retaliatory tariffs in response to President Trump's threat of hiking tariffs on Friday. An exceptional loss in the March quarter impacted Titan's overall performance. Pressure was also seen on the company's gross margins. Asian Paints and HCL Tech will be the two nifty companies reporting earnings today. While high crude oil prices may impact Asian Paints, the legacy business may continue to aid HCL Tech. And ratings agency ICRA and Fitch have downgraded Religare Finvest's instruments to D after it defaulted on payments for the month of April. Let's talk about the action on Wall Street now. US markets swung between gains and losses on Wednesday. The Dow ended flat, while the Nasdaq and the S&P 500 ended with losses after recovering from the day's low. Ongoing trade tensions between the US and China have kept investors on edge. Ed Ludlow of Bloomberg News summarizes the trading session in this report.
Concerns about trade once again drove volatility across US financial markets on Wednesday. We saw big swings across different asset classes. Earlier in the day, Wednesday, we heard from the White House that the Chinese would come to the table on Thursday with the intention of reaching a deal on trade. We later Wednesday got news that the Chinese were considering retaliatory tariff measures against the US from that news that we got earlier in the week. And in terms of US equities sustained gains for most of Wednesday's trading, but later fell away, falling for a third straight day. In terms of where we closed, the S&P 500, the main gauge of US equities, closed down marginally, down by around 0.2%. In terms of the sector-specific story, we saw some strength, though, in real estate and healthcare stocks, but weakness in the likes of utilities and financials. The Dow Jones closed flat on Wednesday, while the Nasdaq closed down 0.25%. In terms of company stories, Apple, which had been hit earlier in the week on concerns about its exposure to China, was actually in positive territory for most of Wednesday, but again fell away and closed flat on Wednesday's session. Then there's other names like Microsoft and Amazon in that tech space that saw a similar story. Intel was hit hard on Wednesday, as was Lyft. Shares closed down around 11% for Lyft, below that $53 a share mark for that company. Looking at the Treasury markets, the yield on the US 10-year was higher by around 3 basis points at 2.48%. And in the currency space, broadly speaking, the US dollar was stronger against most of its major peers. We did see the yen stronger against the dollar amid that heightened volatility in the markets. The Bloomberg Dollar Spot Index was up by around 0.2%, rising for a third day. Now, still to come this week, on Thursday, we get the US trade data, which will be watched closely, of course, by the market, as well as China inflation data. And then on Friday, we get US inflation data, CPI, all of which the market will be watching closely in the context of those ongoing trade negotiations between the US and China. In San Francisco, Ed Ludlow for Bloomberg News.
All right, now the picture is sort of clearing up in Asia this morning. I'm going to go straight to Rosalind Chin, who's joining us live from the Hong Kong studios. Rosalind, the last few of the Asian markets, apart from ours, of course, are opening up. So the picture, as it is a little clearer. A lot of red out there, and I think a lot of that has to do with the tensions between the US and China.
You are absolutely right. It is. And because in the last hour or two, President Trump has been making comments at a rally in Florida, and the markets have been moving on those comments. So at this rally, he did say that China broke the deal. He also said, we won't back down until China stops stealing our jobs. And don't worry on China, he said, it'll all work out. So really some hardline rhetoric there. He's not backing down at all. And that is not going to help any of the fragile sentiment around the markets at the moment. Because we did see, bit of a rough start to the week. Earlier on, we did think that perhaps the markets were starting to stabilize, and then, of course, these comments not helping at all. So we have seen quite a bit of a movement here on the markets. Of course, the MSCI Asia Pacific was already trading lower earlier in the session, and these comments just made it sink further into negative territory, now losing 0.6%, nearly 2/3 of 1% lower. The Nikkei is down 0.8%, the Topix down more than 1%, and the Kospi losing about 2/3 of 1% as well. Now, we know that, of course, Liu He, the Vice Premier of China, is going to be meeting the US side on Thursday, later on Thursday in the US, in Washington, for more talks. And Trump hasn't backed off also from his threat to raise tariffs on Chinese goods, which is, of course, coming up, the deadline coming up on Friday as well. So all this makes a little bit of a mixed message on what's going on with China, but Trump this morning reinforcing his particular hard line on the trade discussions. We've had the Hang Seng Index opening just not long ago, losing 2/3 of 1%. Shanghai Composite down 1/3 of 1%, and the CSI Index losing about 1/2 of 1%. Now, we did get some CPI data from China in the last few minutes. So CPI consumer prices for April rising 2.5% year on year, and that is bang on in line with estimates. Producer prices, though, rising 0.9% year on year, which is a little bit higher than estimates there. So all that data will be feeding back into how investors today will be behaving on the in terms of what they're doing on the markets. But I think Trump's comments perhaps taking a little bit more impact right now. We saw the Japan yen edging higher, of course, but on those Trump comments as more investors flood into haven territory there. Right now, the Japan yen is at 110, just over 110 to the US dollar. We also saw some movement on the Kiwi dollar because, of course, the RBNZ decided to cut rates to a new historic low yesterday at 1.5%. So the Kiwi right now is at 65 cents, 6577 to the New Zealand dollar. So a bit of movement there in the region, and of course WTI dipped lower as well. So I think we'll all be waiting to see what the outcome of these talks will be in Washington today. Back to you.
Thanks so much for that, Rosalind. Well, it isn't just today. This entire week, markets across the globe have been roiled by worries about escalating trade tensions between the US and China. The White House, in a statement overnight, said that they were hopeful of a deal with China. However, just hours later, as has been mentioned, US President Donald Trump said that the Chinese have broken the deal. Addressing supporters at a campaign rally in Florida, Trump said that the Chinese will have to pay for their actions. John Liu of Bloomberg News brings you this update.
You know, Trump overnight said the Chinese are coming to make a deal. And I think that's probably true. I think that the Chinese could have very easily said, hey, if you're going to threaten new tariffs, we're not coming. And I think that the Chinese saying overnight that they would retaliate is not really a big departure from past practice. We've seen them do the same every time that the U.S. has ratcheted up tariffs. So I think it's sort of, the Chinese are trying to show that they're holding their ground, but at the same time, they do want a deal.
And one of the question marks, of course, have been whether or not they could codify some of these demands into Chinese law. Is that something that they're likely able to change their stance on then?
Technically, I think it's very possible. We saw that the National People's Congress passed the Foreign Investment Law during the NPC in March. That happened in a very fast way, and that law really was designed to address some of these concerns that have been raised by Trump and American businesses about how China treats foreign companies.
If we do get to a point where retaliatory tariffs from China do become inevitable, what are they likely to be focused on, and will they move it beyond tariffs on the goods that they've already put duties on?
I think whatever the tariffs are, they're not going to be of the same magnitude as the U.S. tariffs, just because China doesn't import as much stuff from the U.S. as the U.S. from China. The past practice has been to sort of aim it at political targets, farmers, maybe Boeing being what it is in the air or, up for grabs, but it's hard to say exactly what.
All right, but if you're wondering what exactly President Trump said at that campaign rally in Florida, I have the quote. Here's what he said. They broke the deal. They, who are the Chinese, are flying in their vice premier tomorrow. Good man, but they broke the deal. They cannot do that, so they will be paying. We don't make the deal. Nothing wrong with taking in $100 billion a year. We have never done that before, but we have that happening now. End of quote. Well, Enda Karan of Bloomberg News sent us this update describing the Chinese side of things. Remember, the Chinese have threatened retaliatory tariffs if the US goes ahead with its move on Friday. Listen in.
It's pretty hard to gauge at the moment. There's certainly a case for those who say it is just brinksmanship. The US are upping the stakes in order to squeeze out some final concessions from China before they sign off on any kind of a deal. Vice Premier Liu wouldn't be going to Washington without some kind of an offer in the briefcase, is how that side of thinking goes. But then you have another side which says the Hawks are in the ascendancy now in Washington, and they are very serious about pursuing China as hard as they can, and in all likelihood that means these talks are headed for the rocks. We just don't know yet, and that's why I think the next couple of days are going to be really critical to see whether or not this trade truce is extended for some time as we push towards a deal, or whether we do indeed see tariffs being increased, China retaliating, and we head back into territory where we were towards the end of late last year.
What does it mean for U.S. consumers here? Because tariffs could go up on $200 billion of Chinese goods. So U.S. consumers could end up having to pay for more expensive products. Do we know at this point what could be in the crosshairs?
Well, you're right, Sherry. I guess so far the tariffs have broadly escaped the typical US consumer basket of goods like textiles and toys and electronics and the like. The feeling is, though, that if these trade talks do break down and if Mr. Trump then delivers on his threat to impose tariffs on all of the remaining goods from China that the US imports, well, then the consumer will start to feel a squeeze. There are always variables. Sherry, it does depend on whether or not the sellers of these goods pass on the costs, or how much of these can be pocketed, how much of their margins can absorb the tariffs. The role of exchange rates can be important. There are variables when it comes to tariffs, but nonetheless, if we get to a point where the president does extend tariffs on all Chinese goods, well, then that's when economists say the inflationary impact will be felt, and that will dampen consumer sentiment across the US.
All right, well, let's get you set up with regard to the day's trade and also what's happening in the futures and options space. Agam Vakil is here to tell you all about that. Agam, well, it seems like there's a lot of uncertainty globally, and we have been facing a lot of outflows from India.
Yeah.
How are we looking today?
Well, Alex, yesterday was the sixth straight day of losses for the benchmarks, and well, things are not exactly looking very well for now. Well, the S6 Nifty, at least for now, the opening may not be as bad as what we've seen or what we are used to, what we have been used to in the past few days. But talking about yesterday, a lot of selling came through in the last 1 hour of trade, and that has been typical of what we've seen when it comes to trade in the last 2 odd months. While we see a very flattish opening for the benchmark indices, eventually there will be a very sharp move either on the gaining end or the losing end. And it's evident yesterday as well. The banking indices also looking at weakness. Today, we're seeing further weakness when it comes to ADR. So Vedanta, HDFC Bank, and Dr. Reddy's all declining by as much as over 1%. Of course, we have only Wipro and Infosys among others, which are gaining in trade. We will have HCL Tech in focus on account of earnings, but Alex was just talking about FII flows, and that is something which is becoming of a trend now when it comes to outflows on a net basis. 700 crores sold from the FII stable. DIs, on the other hand, buying, well, maybe a third of that amount on a net basis. But moving on to your contributors, again, it was RIL, HDFC Twins, and ICICI Bank bearing down on the indices. But yesterday, the sell-off was a little more broad-based. And this is where we saw selling in a whole host of stocks. We hardly had any gainers. But moving on to your futures and options space, well, shorts continued. Another 3.5% added in open interest, even as the index declines by around 1.2%. It's the same for the banking Nifty as well. Moving on to options and what we can expect in terms of changes, we did see a little more writing around the 11,500 call. Well, and this is a bit surprising considering the index is actually below that mark, which means that 11,500 could very well act as a resistance now instead of being a support, as was the case for the past few weeks. But when it comes to your India wicks, again, we did see a little bit of a decline there. It hasn't climbed despite the fact that the indices came off, so that perhaps could be a positive, but you never know. Moving on to your put call ratio, an absolutely neutral level of 1. So we have exactly 1 call for 1 put, and well, it's anyone's guess as to where we can go from here. Jet Airways continues to remain in the F&O band naturally, but moving on, we do have Kajaria Ceramics. Z Entertainment will be in focus, the top nifty loser yesterday, considerable amount of shots added. Voltas, of course, on account of earnings today, and besides that, we're also keeping an eye on something like CG Power, Marico, and Diwan Housing Finance. Marico did see a short covering after we saw strength the day before. But again, Alex, uncertain times, and there will be uncertainty when it comes to indices too.
Thanks so much for that, Raghav. Well, let's look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the first word headlines.
Trump administration, which is stepping up the pressure on Iran, imposing sanctions on the country's metal sector. Now, the ban on the purchase of Iranian iron, steel, aluminum, and copper is intended to prevent Tehran from raising funds to develop nuclear weapons or ballistic missiles. Earlier, Iran said it would abandon uranium limits agreed to in the 2015 nuclear deal unless the EU can find a way for Iran to trade despite U.S. sanctions. U.S. Secretary of State Mike Pompeo, meanwhile, has criticized the U.K., warning the government not to go wobbly, those are his words, on national security and China, and to hurry up and deliver Brexit. His blunt remarks threaten diplomatic ties between two close allies and come just a month before President Trump is due in London for a state visit. Pompeo raised the question of what the so-called Iron Lady Margaret Thatcher would do if faced with the challenge of China trying to boost its global influence.
The United States and the UK cooperate a great deal on regional security in Asia as well. That cooperation will be all the more necessary as China tries to shift the global balance of power in its favor.
The Huawei CFO, being held in Vancouver, says her constitutional rights were denied when she was held at the airport back in December. Meng Wanzhou's legal team say her detention amounted to an abusive process. The team also says comments by President Trump about the case are political interference. Meng and Huawei are accused by the U.S. of fraud charges over dealings with Iran, and she is fighting Washington's demand for extradition. The U.S. House Judiciary Committee is holding Attorney General William Barr in contempt of Congress, this for failing to comply with a subpoena for the Mueller report. The vote escalates the clash with the Trump administration, which is refusing Democrat demands to hand over the documents and testimony. The president is using executive privilege as an excuse not to comply with the subpoenaed items, including the counsel's full report. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Well, on the face of it, it may look like has been a very large operational miss, but on the whole, revenues have been very strong, in line with street expectations, and the operational miss was largely on account of one-offs. So to take you through the earnings, let's start off with your top line. And what we are seeing here is well over 19% growth, in fact 20% growth when it comes to your revenues. Well, EBITDA has missed expectations, even though it has risen by as much as 11%, and we are seeing considerable contraction reduction as far as your margins are concerned. But if you actually look at your adjusted EBITDAs, our margins are more or less in line with street expectations, and that's the reason why profit has risen just about 4.5% as against the expectation of 401 crores. Now, in terms of the jewelry segment, the all-important segment where you have 80% of your revenues coming in through there, what we're actually looking at is nearly 19%, 21% growth on a year-on-year basis. This is just short of what the street was working with, but given the fact that the company has actually seen pricing move in its favor, that's the reason why there has certainly been growth when it comes to your top line. Again, similarly, very steady growth for watches as well as eyewear, which is finally coming out of the fact being inconsistent with respect to growth. And all these factors are also aiding top line growth for Titan. In terms of one-offs, there are just a few. Firstly, the company has provided for more as far as its deposits in Island FS goes. So that, of course, is that impairment comes to around 46 crores. The company has also taken another impairment of as much as 70 crores due to impairment in one of its subsidiaries, Favalabo. So again, that works against the company as far as its operating margins are concerned. And of course, the company has also considered early retirement schemes because of which, at least for this particular quarter, it takes a hit of around another 5.7 crores. But on the whole, it's been a very steady quarter if you consider the operations and if you leave out the one-offs, and that's the reason why a lot of brokerages are also positive as far as Titan Company is concerned.
Well, the street is anticipating a steady quarter as far as Asian Paints is concerned. Revenues are seen growing by about 16% on a year-on-year basis, coming in at about 5,200 crore rupees, aided by a strong double-digit growth in volumes when it comes to their domestic decorative paint business, which according to most brokerages could be in the range of 12 to 14% for the fourth quarter. EBITDA is seen higher by about 17%, while margins are only seen expanding marginally to 18.9% versus 18.7% in the same quarter last year. Net profit too is seen higher by about 22% on a year-on-year basis, expected at about 587 crore rupees. In terms of the key factors to watch out for, first of all, like I mentioned, it would be the volume growth in the domestic decorative paint business, which again, according to the most brokerages, would be in the range of 12 to 14%. That apart, watch out for the trends as far as the gross margin is concerned. The raw material prices, they have seen some amount of cool off from their peak in last quarter, and because of that lag in raw material prices, margins could see some amount of expansion over there, as well as the fact that the company has effectively taken price hikes in the last quarter, and some cost-effective measures should aid the margins as well. That apart, watch out for the management commentary with respect to the demand outlook. Kansai Nerolac has suggested that the demand outlook for the next couple of quarters seems weak, so we'll be keenly watching out for that, along with the performance and outlook of the industrial paint business, as well as any commentary with respect to the market share gains for Asian Paints in the fourth quarter.
Right, coming down to HCL Technologies and what we can expect, it's going to be a steady quarter, not unlike what we've seen in terms of its peers. So starting off with dollar revenues, we're likely to see about a 2.5% uptick. We're also expecting about a 1.5% uptick when it comes to revenues in rupee terms. EBITDA margins remaining largely stable between 19.6 and 19 versus 19.7. Net profits seen down by as much as 2.3% owing to one-offs. Now, as far as its guidance is concerned, if you actually include the IBM products, taking that into consideration, guidance could be anywhere between 14 to 16% as per expectations from at least two brokerage firms. And again, margins could be between 19.5 to 20%. So that's where stability is expected. Revenue growth will be led by infra management services because we're seeing a little bit of a turnaround and deal ramp up in this particular area. We're also seeing higher investments in business, which so as to diversify beyond just IMS. And besides the guidance, we're also keeping an eye on focus on capital allocation, considering aggressive, acquisitions. So would that mean that allocation towards giving money or excess money back to the shareholders could reduce this particular year? That's a big question. And M&A strategy going forward will also be another key watchable as far as HCL Technology is concerned. On the whole, not expecting any negative or positive surprises. Well, it should largely be a steady quarter for HCL Technologies.
There are a number of important results we'll be looking at today, starting with KEC International, which came in with an average set of numbers. Their revenues are up 5% at 3,841 crores. Their margins are at 10.4% versus 10.1%, and they had a deferred tax reversal of 2 crores in the base quarter. Then we have Tata Communications, which came in with a weak set of numbers. Their revenues were down 0.6% at 4,244 crores. They had a net loss of 198.5 crores on the back of loss in associates and higher other expenses. Their margins stand at 16.1% versus 19.7%. Shriram Transport Finance also came in with a weak set of numbers. The net profits are down 22.4% at 746 crores, and they had an exceptional gain of 140 crores and a deferred tax payment of 53 crores in the base quarter. Then Hindalco's US subsidiary, Novelis, came in with a very strong set of numbers. The net sales are up 1% at $3 billion. Adjusted EBITDA is up 12% at $357 billion. The sales were driven by higher total shipments, which was partially offset by the lower average aluminium prices. Shipments of flat-rolled products increased by 8% to 870 kilotons, and Hindalco sold Kolar unit to Mundra Aluful for 28 crore rupees. The company says that the unit was not in operation since March 2016. Then we have Vodafone Idea. Vodafone Group's international and domestic promoters pledged 44% stake of the company to a group of 7 international banks. TVS Motors Singapore arm invests 11 crores in Tagbox Solutions. The target company provides supply chain solutions. India Ratings downgrades long-term issuer ratings for Yes Bank to IND AA- from IND AA+ with a negative outlook. And lastly, let's have a look at the key bulk deals. Catalyst Trusteeship sold 86 lakh shares, which is 0.9% of Z Entertainment Enterprises at 342.3 rupees each.
All right, well, there are several stories available on the website bloombergquint.com, including earnings and, of course, the live markets. But here are a couple of stories that you should consider reading at this moment. A London judge has rejected Nirav Modi's third attempt to get bail. This after his lawyer said that Indian authorities have seized or liquidated an equivalent of $816 million of his funds, and that he doesn't have access to enough resources to flee the country even if he wants to. And the Reserve Bank of India has stuck to its guns and said that it won't share annual inspection reports of banks or any other financial institutions under the Right to Information Act, despite a Supreme Court order to do so. According to the RBI's fresh disclosure policy, which was released on the 30th of April, the negative list on topics where the central bank won't share information under the RTI includes information available with the Banking Supervision Department regarding any annual inspection and supervisory or scrutiny reports. All right, well, that's all you need to know going into trade today. But do remember, there's a lot more on the website, bloombergquint.com, so just have a look right now. This is Bloomberg Quint.